Good afternoon. This is Peter Fruller. I'm joined by Amy Goodman, CPA, and we're here today to go over the PPP Loan Forgiveness Program, the application that was released around a week ago, and some clarifications on what expenses are going to be included for forgiveness and what expenses are not. I'm going to turn it over to Amy here to go through the program in a quick informational webinar.
Hello all, thank you for joining us on this webinar. Our goal today is to share with you what we do know about the PPP Loan Forgiveness Program. As you've kind of heard from us over time, there are a lot of things we still don't know, and we'll be sure to highlight those as well. But just wanted to kind of get you familiar with the specifics as we know them to date, to get you a jump start on trying to track this information for the forgiveness application. We strongly encourage you to get started on this sooner than later because as Peter and I have seen from going through the information, there's quite a bit there. So it's not something you're going to want to wait till the last minute to kind of check out. So let's start with what do we know on the PPP loan forgiveness. So as you've heard before, there are two categories of expenses which may be eligible for the loan forgiveness. Those are lumped into payroll and non-payroll. As we've heard before, the payroll expenses to be eligible for forgiveness must be a minimum of 75% of the loan forgiveness amount. So that's going to be your kind of target figure, is that 75% for the payroll costs. What are included in the payroll expenses? And let me back up for 1 second. We're going to go through a couple of things here. We'll go through what the eligible expenses are, both payroll and non-payroll. I'm going to give you a couple of definitions that have come up in the loan forgiveness application that kind of give us a little more clarity, and you'll need to know these terms as you work through this. We're going to discuss the actual loan forgiveness application and the documentation that goes along with that. And then we're going to mention some of the most common questions we've heard and what we do or don't know in response to those. So we hope you find this helpful, and here we go. So the payroll expenses. What is eligible for forgiveness is going to be cash compensation paid to employees. That's going to be your gross salary, your wages, tips, commissions, leave time is going to be includable, and allowances for dismissal or separation pay. A reminder, I think we've all discussed this at length probably, but the amount of wages and compensation that can be considered for this purpose cannot exceed an annual salary of $100,000 per employee. So therefore, if somebody is earning more than $100,000 a year, the amount eligible for their forgiveness will be limited to the prorated version of that for the covered period, which is about $15,385. So that's the one limitation you have there on the compensation. In addition to compensation, we have our employee benefits. That's going to be employee health insurance. Not anything that the employee contributes to, but the employer portion would be eligible. And that's for anything that's not in a pre-tax plan. You can take the cost of those for the covered period. In addition to the health insurance, another benefit that might be eligible is if you have an employer retirement plan in place. So the cost there would be the employer's portion of the retirement plan contribution. Again, it's going to be prorated to this covered period, this 8-week period that we keep talking about. Not a huge amount of clarity there on what that would actually mean, but what seems to be the going mindset is if we kind of look at your 2019 retirement plan expense and then prorate that for the 2-month or so period that is going to be covered by this forgiveness, that's probably going to be a safe bet to use for the eligible expense. Additionally, one other little item is the state and local taxes assessed on the employee compensation, which pretty much boils down to your state unemployment tax. So that would also be eligible during the 8-week period for forgiveness.
So Amy, for health insurance, does it have to be a group policy in the name of the company, or would a personal policy count?
Right, so it's supposed to be an employer-sponsored group health plan is how that's read. And I have not heard anything different from that. Have you, Peter?
Nope. My Our advice is it has to be a group plan with a policy issued in the name of the company. It cannot be a personal policy acquired on the exchange that the company just happens to pay for.
To reimburse for it, correct. Okay, before I move to the employer wages and compensation, any other comments there, Peter, on the employee compensation and benefits that are eligible?
So do you address later on about owner pay and owner benefits?
Yes, I'm going into that right now. Yes,
Perfect.
so thank you for that segue.
Good segue.
So on the employers, so for an employee owner, we're a lot more limited in these categories. So the only category from what I have read, including the most recent update, the only category eligible for forgiveness on an employee owner is the cash compensation. So that's the wages paid during this period. Now we have two limitations there that are very interesting. One is the one we've already discussed, which applies for every employee, which is that the amount considered for forgiveness has to be limited to that $100,000 equivalent annual salary. So that one we've kind of talked a lot about. The other interesting thing that's come up, and this would apply to any employee owner whose wages were less than $100,000 in 2019. If your wages were less than $100,000 in 2019, then for forgiveness, you're actually going to be limited to that 2019 wage that was taken. So again, this is for people who took less than $100,000. Let's say you took a wage in 2019 of $75,000. You cannot then bump your salary up right now to a $100,000 equivalent and get a higher forgiveness amount than what you had paid yourself in 2019. So that's something new that we really want to kind of spotlight because that had not really been highlighted before.
So as an owner, I can't give myself a raise during this 8 weeks, right?
Yeah, not in comparison to your 2019 wage. That's correct.
But
now,
can I give?
Go ahead.
Nope. I was going to ask, what about my employees? Can my employees get a raise?
Yes. So from what we've seen, there has been nothing that precludes you from giving the employees a raise during this period. And in fact, originally bonuses, which we actually will cover again in our frequently asked questions, were a little bit dubious. But Peter, the thing I actually read most recently that came out, I think it was just this past Friday night, which would have been like May 24th-ish, actually specifically said bonuses for employees are okay. I think we'll talk about that a little bit more because that is a hot button item I think that everyone's interested in, but yes, the employee could earn more. Anything else on this subject before I move on to what are the non-payroll expenses included?
All good.
Okay. So moving on to the non-payroll expenses. So again, the strategy you're going to want to take as you work through this is to try to figure out your payroll expenses first. Make sure you're hitting that at least 75% mark. If you're in excess of 75%, that's great. That's actually a good thing. So that's good. That's kind of your goal is to get that category taken care of. The remainder can then be used for these non-payroll expenses that are detailed out very specifically. There's 3 categories that we can look at there. The first one is what they call business mortgage interest payments. These are payments of interest on any business mortgage obligation on either real property or personal property. The caveats here are that the obligation had to be incurred before February 15th, 2020. So this can't be something that you just went out and locked yourself into after February 15th. It had to exist on or before that date. Additionally, it's the interest portion of those payments that is eligible, not the principal portion and not any prepayment you might decide to make. So if you want to try to pay 6 months interest in advance, that will not count. The next category of expenses are business rent or lease payments. Again, there's going to be a similar stipulation here. This is covered rent obligations for business rent or lease payments pursuant to lease agreements for real or personal property. But again, they had to be in place before February 15th, 2020. So again, not something you just went and got recently, but something that was already in place. The last category is pretty straightforward. It's business utility payments. From what we've read, it looks like that will include your standard, like electricity, gas, and water. But we also seem to see that it's going to include your telephone and internet access. And even on this category, there seems to be a stipulation that these had to be in place expenses that you were incurring for the business before February 15th. So these three categories of expenses, one other thing I want to highlight, all expenses that are potentially eligible for forgiveness have this overriding limitation, which is that they must be paid or incurred, paid and incurred during your covered period. So we will talk a little bit more about that shortly when I define the covered period. But just keep in mind, paid and incurred during the covered period. So just that's going to be kind of our guideline.
And so on business utility expenses, let's say I've got a cell phone that my business pays for, but it's actually in my name personally. Can that be included?
Let me throw that one back to you. So my understanding, first of all, I'm joking. I'll first answer that. I was under the impression it has to be in the business name. Peter, have you heard differently on that?
I have not. So just be careful in terms of your utility expenses. Sometimes we may have things that we pay for out of the business, but the contract is the key item here. So if the contract is in your personal name, for PPP loan forgiveness purpose, it is not considered a business debt. It is a personal debt. So just double check. This also has applicability if you are an independent contractor, but your utility bills are in your personal name, may not count. So don't bank on including your entire household expense for utilities and water. If it's in your personal name, it may not count. We don't know if there will be any safe harbor given under those circumstances, but for planning purposes right now, I would not include those expenses for forgiveness.
Yeah, I agree. Okay, so the next thing I'm going to do is go over a few definitions I think you're going to want to be familiar with as you work through this, as well as a couple pieces of random information that didn't really fall into any other categories that I wanted to also call your attention to. So let's start with the definitions. What you're going to hear referred to a lot is the standard covered period. This is probably what you already are thinking about in your head as the covered period. It is the 8-week period that begins with the date that the PPP loan proceeds were received. So in other words, as an example, if you received your loan proceeds on Monday, April 20th, 56 days later would be the end of your covered period. That would be Sunday, June 14th. So that's kind of your standard covered period. As we've read through this, it's interesting because I feel like the SBA is trying to not make this more difficult than it needs to be. So they added a couple other little situations here, which I think what they're trying to do is keep with the spirit of this whole loan forgiveness program, which is to allow you 8 weeks worth of expenses without making you have to run around and try to pay bills that aren't quite due yet and shove things into this 8-week period. So for example, another term that you're going to need to be familiar with is this alternative payroll covered period. So you have your standard covered period that we just discussed. They've now outlined what they call the alternative payroll covered period. And what that is if you receive your loan proceeds on a given date, you're actually allowed to use for the payroll costs the 8-week period that starts on the first payroll date, that your first regularly scheduled payroll date after receiving the loan proceeds. So again, let's go with that first example I gave you. If your loan proceeds were received on Monday, April 20th, and then your first payroll, your normally recurring payroll for your business occurs on later that week on April 26th, then your alternate payroll covered period can be April 26th through Saturday, June 20th. So that's kind of that alternate period. So what I think they're trying to accomplish there is to allow you to keep your regular payroll schedule and not try to change up your payroll routine or your normally recurring payroll dates in order to try to shove more into the 8-week period. They're trying to work with you on what you already have in place. So that's that alternate payroll covered period. So keep that in mind when you hear that term. Another definition I wanted to mention was the reference period. So this is for comparing the full-time equivalent employees and the average wages paid. So as you may recall from previous communications we've sent out, your loan forgiveness can be reduced if there is a reduction in full-time equivalent employees and or wages paid. And that reduction is based on a reference period. So your reference period for full-time equivalent employees and wages, you actually get two options. So you can either use the period of February 15th, 2019 through June 30th, 2019, or as a separate option, you can use January 1st, 2020 to February 29th, 2020. And there's a third option for seasonal employers. If you are one, you can just look into the application for that information. But this is what you're going to want to do is kind of check both those periods probably and determine what works in your best favor. But that's the two options for the comparison period. You cannot select different comparison periods for the full-time equivalent and the wages. It would have to be the same period for both of those elements. All right, next little term I want to kind of bring to your attention. There's actually a safe harbor provision that they threw into this. So for the full-time equivalent employee reduction, they give you a safe harbor, which says that you will be exempt from any reduction in your loan forgiveness due to a reduction in full-time equivalent employees if both of the following conditions are met. So if you reduced your full-time equivalent employee levels in the period beginning February 15th and ending April 26th, 2020, and if you then restore your full-time equivalent employee levels to the full-time equivalent employee levels that were existed on February 15th, if you restore them to that level by June 30th, 2020, then you will not have a reduction for full-time equivalent employee. So in other words, like June 30th, 2020 is kind of a safe harbor date they've provided to you to get your level of full-time equivalent employees back up to speed. And then you can take advantage of that safe harbor. One other interesting thing, and this has come up a lot in questions from clients, is what if somebody chooses not to come back to work when you've offered them to return? And the concern obviously there is now my full-time equivalent employee is going calculations are going to decrease, and I don't have a lot of control of that, right? If somebody refuses to come back. So they've actually given you an exception to having to reduce your loan forgiveness on the FTE element if the following situations exist. So any position for which you have made a good faith written offer to rehire an employee during the covered period, or even the alternate payroll covered period, if that was rejected by the employee, then you will not be penalized in terms of limiting your forgiveness for this portion, for this line item for the full-time equivalent employees. So again, that's if you have made a written offer in good faith to rehire an employee during this period and it was rejected, then you will not be penalized. Another example is any employees who during this covered period or the alternative payroll covered period were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of their hours. Any full-time equivalent reductions in those cases also do not reduce your loan forgiveness. So those are some nice, helpful provisions they put in there. We would strongly encourage you to document these situations because that is definitely something that you are going to have to be able to support as having occurred. Peter, any questions at that point?
No, one item to ask you for clarity on is how do you define a full-time employee? How many hours per week is a full-time employee?
Okay, so the full-time employee is considered 40 hours a week. Peter, if you want to elaborate a little bit more on where you're headed with that concern, because I think you might have something in your mind that you're thinking about that we should highlight to people.
So my office is open 4 days a week.
Mm-hmm.
We're closed on Fridays. For purposes of this application, everyone is assumed to work 40 hours a week when calculating full-time equivalent employees. Again, this shouldn't have a big concern if you were only open 4 days a week during the comparison period too. But please understand that if your normal work schedule is 32 hours, not 40, for purposes of these tests, it's 40 hours.
Right, so that could definitely impact your calculation. So you definitely want to work through these numbers in advance to see how that might impact you.
Absolutely.
And we know that's true for a lot of you because a lot of us have had reduced business hours as a result of the situation. So I think a lot of people are going to fall into that boat. Okay, so back to my slide. There's just two other things I kind of want to highlight here, and these are some information and limitations. So owner compensation, again, we actually mentioned this before about, we knew the $100,000 limitation, but on the flip side of that, you can't bump yourself up to a wage that was more than your 2019 wage. Another thing that is stated in there is that employees must have their principal residence in the US in order to be an employee whose wages can count towards forgiveness. All right, so moving on to what is our last main point. This is the whole forgiveness application as well as the documentation required. So we did not know until about a couple of weeks ago that they were going to put out a standard application for the loan forgiveness. So that's actually been, I think, kind of a good thing because I think it kind of levels the playing field a little bit for all of us to kind of know this is what we have to do in order to submit for the loan forgiveness. I would strongly encourage you to go check out the application as well as the instructions and schedules that go along with it. And I put the link to the website there. It's on the SBA's website. It's pretty involved, so you're going to want to spend some time working through that, but it's also informative at the same time. A couple things I'd like to highlight about all of that. The forgiveness application also requires a lot of documentation that you're going to need to provide, and it stipulates exactly what that is, and I'm going to just mention what some of those are. It's nothing you probably didn't necessarily expect, but just you need to make sure you start tracking these items. So some of the documentation includes the bank account statements supporting the expenses that you paid out related to the loan forgiveness. Tax forms, this is particularly for the payroll expenses, which is going to include the payroll tax filings reported during this period, like your 941, as well as your state quarterly business wage reporting, which is going to be like your RT6 for the state of Florida. Payment receipts, canceled checks, or account statements documenting the amount of any employer contribution to employee health insurance and retirement plans. So everything essentially that you're paying will have to be documented is kind of the bottom line there. Furthermore, even this full-time equivalent employee requires documentation. The calculation of the average number of FTEs has to be calculated. Documents must be provided supporting those numbers. Those are going to probably come in the form of payroll tax filings during the 8-week period that are made for that 8-week period. They do note that they're okay if the documents submitted to substantiate your full-time equivalent employees is like a 941, which covers a period greater than the 8 weeks. So, which is probably going to be most of us, right? So most of us are going to use our 941, most likely for June 30th. And they said they're okay with that in terms of documenting the full-time equivalent employees, even though that covers a greater period than just the 8 weeks. The non-payroll documentation that's going to be involved is the business, let's start with the first one, the business mortgage interest payments. They're going to want a copy of the lender amortization schedule and receipts or canceled checks verifying the eligible payments during the covered period, or a lender account statement from February 2020 and the months of the covered period through 1 month after the end of the covered period, verifying interest amounts and eligible payments. So notice what they did there is they're kind of covering a little bit past the end of the covered period. And I should touch on this briefly here. Interestingly, if you read through this loan forgiveness application, same thing with that alternate payroll period, where my feeling is they kind of provided that to not make things more difficult. I read something about, like, for example, on a utilities payment, if you have a utilities payment due for your 8-week ending period, but the payment is not due until the subsequent week, they will look, you can still make that payment even after the close of your 8-week period, just if that's your normal, regularly scheduled pay date for the utility payment, but they will still consider it. So I would look closely into that. I personally might not take advantage of that just to avoid any headaches with reporting all of this, but it does read that way, that you can actually make the payment at your regularly scheduled date if it's for the covered period, and if that due date falls outside of the covered period. But again, that's something you should probably look into and make a judgment call on. Realize that everyone's going to be submitting a lot of documentation, and you want to make this as seamless for review by the bank or the SBA as possible, so that you don't have subsequent headaches related to this. So decide what you think is the best thing to do there. On the business rent or lease payments, a copy of the current lease agreement and receipts or canceled checks that verify eligible payments from the covered period, or lessor account statements from February 2020 and from the covered period through 1 month after the covered period. So same kind of provisions as the business mortgage interest payments. And on the utilities payments, copies of invoices, again, from February 2020. So again, trying to substantiate that you had those in existence in February, as well as the invoices covering the covered period, canceled checks, or account statements verifying the expenses from the covered period. So when you look at the PPP loan forgiveness application at the SBA's website, there's this Schedule A worksheet, which has a lot of calculations involved in it. You will either have to submit that worksheet or something that is equivalent to that. So pay close attention to that and work through that, because that's something that you will have to submit in one form or another, whether you use the standard form or try to come up with your own. So take a look at that. It involves calculating things like the salary and hourly wage reductions, the reductions for any compensation in excess of the $100,000, the documenting for terminated employees, and the FTE reduction safe harbor. So pay close attention to that schedule and take some time to get yourself up to speed on that. The last thing I wanted to mention was that the borrower must retain all documentation in your files for 6 years after the date that the loan is forgiven or repaid in full. So if you get loan forgiveness, then we're going to go for it was 6 years from that date. If you end up having partial loan forgiveness and you keep the balance of the loan and repay it over the allowable period, then you need to keep documentation from 6 weeks, 6 years after the whole loan is paid in full. So that's a good bit of time. Make sure you keep that, so that, again, to cover yourself. Those are kind of the most important things that we kind of saw in all the information that's been out to date. So before I move on to my common questions, anything you need to interject there, Peter?
So the only thing I would really stress is read the 11-page application and instructions on the SBA website. The banks are going to use that as a model. Each bank will be a little different, but that's going to be the primary set of documents. Make sure you understand that there are subschedules that feed into a main schedule that feed into the application. And understand that this is not going to be something that you're going to probably complete in 10 minutes on a Friday afternoon to submit to the banks. Final thing is that the application deadline to submit for forgiveness is October 31st. And then after the banks have it, they have a period of, I believe, 2 months to approve you on forgiveness. So you should hear back fairly quickly, but understand that we're expecting a lot of give and take with the banks in terms of wanting to see information. So for those of you who apply for forgiveness earlier, you're probably going to have more pushback and more questions, and some of you who may apply later. But expect that there will be questions and answers similar to what we had when you submitted for loan forgiveness. or when you applied for the PPP loan, excuse me.
Yeah.
There will be some back and forth on it, and just be prepared that you're going to have to answer those questions.
Yes, definitely. And I would also encourage you to reach out to your bank and just find out what guidelines they're providing on the application process, the due dates, et cetera. Because like, as Peter was saying, this is going to be managed by all the different banking institutions. So you're going to want to make sure you're in line with what your bank is saying as well. Okay, so my final wrap up here with kind of some of the most frequent questions we've heard. Can I pay bonuses to employees and have them be eligible for loan forgiveness? The answer to that is it seems that you can. Again, you have limitations in place there. That $100,000 annual salary equivalent is a limitation. Paid and incurred during the period is a limitation, but from what we've read, bonuses are acceptable, as well as is, I meant to mention this earlier, hazard pay, which I think some people are kind of considering, like, especially in some of the medical practices and dental practices, they're considering kind of a hazard pay for being willing to come back during this difficult time. So think about that as well. Can you prepay expenses? No, you cannot. That's that whole paid and incurred. In order to get forgiveness, it has to be paid and incurred. So prepaying would not meet the incurred requirement. So don't bother with that. Can you add family members to your payroll? This is one we get a lot. So nothing I have read, and I'm going to let Peter answer after I do, nothing I have read says you cannot do this. Does that mean you can't do this? We do not know. So does this mean you cannot do this? We're not going to, that's not known either. But it's something everyone's kind of looking at. Peter, have you heard anything specifically on that I have missed?
So the term owner is not defined. So I would use as a starting point that if your name is on a Schedule K1 for an S Corp and for a partnership, you're an owner. If your name is not on that K1, you're not. For a C corporation that does not have a K1, I think it would just be a list of owners that you have on your stock register. The only concern I have with adding a lot of family members as employees for this 8-week period is I don't know if the SBA, as part of their auditing process, are going to go through and look at your payroll records after this ends. I don't know. There's a possibility that they may, and they go, okay, well, you had 6 employees, 3 no longer received a paycheck on the 9th week. Does that possibly mean a problem? Maybe. Does it mean we have to validate what this person did for employment during that period? Probably. I would just exercise caution as you make those decisions. Now, for some of you, there may be a situation where my office manager, my admin person is not back, could not be back because, hey, daycares aren't open yet. May not be back because they don't feel comfortable coming in, have an elderly person in the household, et cetera. And a family member may be drafted, a lack of a better word, into the business. Okay, got it. That's fine.
Yeah.
I just wouldn't blindly put people on payroll and expect there to not be a problem potentially. Again, we don't know on the audit requirements yet. This is new. I know of 2 cases where the federal government has gone and pressed charges against people for PPP fraud. One instance is a social media influencer in Atlanta who bought a 6-figure car after receiving a $1.5 million PPP loan to pay for a trucking company this person is an owner for. The second instance is a person in Texas who basically made up fake documents and submitted it for a loan. And so I think there is going to be policing of this. I don't know to what extreme. Part of it is on the application, there is a checkbox that says if you received over 2 million, check. And I think that's pretty much the IRS's way of trying to figure out who they really need to look at versus who they may not need to look at. That said, please apply the smell test. If it smells kind of funky, you may not want to proceed with it. We just don't know yet in terms of how they're going to structure this. One other comment on the family members, and Amy and my world of the IRS, usually family member or owners means family members, meaning I can't take a benefit from the company I own but my wife could. Usually it's defined as pretty much within the family unit,
Yeah.
going up and down generations.
Yeah, so your parents, your children, and your spouse. I agree, Peter. I've said that to many clients as well. I said, you know, the IRS is not running this, but that is their mindset on everything that they do, which is that's kind of one and the same when it comes to who's really behind these transactions. I've been thinking about it the same way.
So even though we don't know yet, we're coming to the end of the period for many people who receive loans at the first go around. Understand the rules may change on this, and we just have to wait and see. They may not change. We just don't know. So please exercise caution. Now, if you've had family members on prior to this, I think there's a little bit more justification for having them on, but understand it may boil down to, okay, show us time clock records, show us what they did, show us what they're doing. And that's the principle I think I would take away from this.
Absolutely. I totally agree.
Cool. Well, listen, on behalf of Amy, I appreciate everybody joining. Feel free to reach out if there are questions, and I hope you found this to be informative, and I hope you have a great rest of your day, and please be safe.
Thank you.
Bye for now.